Greetings to everyone. I am Chief Financial Officer Toshiki Oya. Thank you for joining the FY2025 third quarter financial results briefing of GREE Holdings. First, I would like to explain the changes to reportable segments and the establishment of the IP Business Department as shown on page 2. We established an IP Business Department on April 1st, 2025, and designated it as a reportable segment starting this period. We did so to reflect the growing market importance of the IP and content businesses, such as anime and manga, which our group has long been engaged in, and in view of our plans to further strengthen our efforts in these areas. As for specific changes, we have integrated the anime licensing business, which was previously part of the game and anime business, and the manga-related business, which had been categorized under Other. These have now been consolidated into the new IP business segment overseen by AG Araki. Details regarding the IP business will be provided later in this presentation. On page 3, we provide an executive summary. I will explain the organic business trends, focusing on the 4 segments, including the newly established IP business. We achieved strong results in all business segments in third quarter, resulting in Q-on-Q growth in both sales and profit, with profit coming in above our forecast. The heads of each business will provide details on their respective segments later, but in the game business, our new title, Puella Magi Madoka Magica Magia Extra, is off to a strong start. We would like to express our gratitude for the positive reception that Puella Magi Madoka Magica Magia Extra has received from so many users, following in the footsteps of That Time I Got Reincarnated as a Slime, Isekai Memories. As for GREE Holdings' consolidated results, because the investment business received a large dividend distribution in second quarter, sales and profit showed a reactive Q-on-Q decline in third quarter due to the absence of a similar dividend. On page 6, we provide an overview of consolidated results for GREE Holdings. Sales and operating profit were as shown here. Operating profit and net income declined quarter-on-quarter due to foreign exchange losses and impairment losses posted on affiliated company shares. Page 7 shows an overview of quarterly results on a 4 segments basis. Sales and operating profit rose quarter-on-quarter and surpassed our expectations. On page 8, we provide an analysis of quarterly operating profit on a 4 segments basis. Sales rose quarter-on-quarter. Operating profit reached 1.7 billion yen, as expenses declined on improved profitability. On page 9, we break down our cost structure for third quarter on a 4 segments basis. Looking at variable costs, advertising costs rose as we strengthened promotions for a new title, but commission fees declined on improved profitability. In addition, receipt of development funding for games led to a Q-on-Q decrease in fixed costs, resulting in total expenses of 12.4 billion yen, a Q-on-Q decline of 170 million yen. Page 10 shows our dividend forecast. We plan to pay dividends of 14.5 yen per share. We target DOE of roughly 3% and a consolidated ratio of 30% or higher, but we also set a maximum consolidated dividend payout ratio of 70%. Based on this plan, we have decided to pay a regular dividend of 4.5 yen per share. In addition to this, to celebrate the 20th anniversary of the founding of the company, we also plan to pay a commemorative dividend of 10 yen per share. On page 11, we cover financial discipline. As we operate relatively volatile businesses, we place a very strong emphasis on maintaining financial soundness. As we have received requests from bond investors for an explanation regarding our financial discipline, we took this opportunity to provide an explanation here. We have established an equity ratio target of 60%, and our current equity ratio is well above this level. We have also established an interest-bearing debt to EBITDA ratio target of 6 times or lower, and the current level is roughly 3 times. Looking at cash and interest-bearing debt, as net cash, this is cash minus interest-bearing debt, remains high. Our financial position is strong. Now, Sankushino will provide an explanation of the progress we have made toward achieving our management plan targets. Page 14 shows sales and operating profit on a four segments basis. Sales were 14.1 billion yen, and operating profit was 1.7 billion yen. Page 15 shows our vision for long-term growth. We will continue to pursue growth by regularly generating hit titles in the game business. We position the other three businesses as continuous growth businesses, where we aim for steady growth. Page 16 shows sales and operating profit of continuous growth business. Sales were 4.4 billion yen, and operating profit was 600 million yen. Page 17 shows business conditions in our four segments. Both sales and operating profit rose quarter on quarter. Page 18 shows our four-segment forecast for fourth quarter of FY2025. We expect sales to rise on contribution from a new title in the game business. However, we forecast a decline in operating profit as we plan to invest in the VTuber business. Page 19 shows our four-segment forecast and estimates for fiscal year 2025. While sales are now expected to fall short of our forecast owing to the delayed release of a new title in the game business, we expect to reach our operating profit target on improved profitability across multiple businesses. Page 20 shows our medium-term targets for our four segments. We aim for steady growth in continuous growth businesses and growth in fiscal year 2027 and beyond in the game business, which we classify as a long-term investment businesses. Page 22 shows sales and operating profit by segment. For more details, please wait for the parts of this presentation covering each individual segment. Page 23 shows our forecasts and estimates for each segment. Page 24 shows progress made toward our full-year FY2025 forecast. We will also explain these forecasts as we discuss each individual segment. Next, Yuta Maeda will explain the game business. Page 26 shows sales and operating profit in the game business over the past 5 years. Sales were 9.7 billion yen, and operating profit was 1.3 billion yen in third quarter. Page 27 covers new title, Puella Magi Madoka Magica, Magia Etc. We released this title on March 27th. We are pleased to report that KPIs such as user reviews and sales rankings have all gotten off to a good start. Over the past 3 years, we have achieved major hits in the RPG genre with 3 consecutive smartphone games. That Time I Got Reincarnated as a Slime, Isekai Memories, Heaven Burns Red, and most recently, Puella Magi Madoka Magica, Magia Etc. We have not only deepened our own confidence that our engine strategy can generate hit titles with a fair degree of consistency, but also demonstrated this to many of our partner companies. We consider this a major achievement for a strategy that we have been consistently communicating. On page 28, we present an overview of the game business. We expect earnings contribution from Puella Magi Madoka Magica, Magia Etc. starting in fourth quarter. Recent new title promotions have been effective, and we are therefore strengthening promotions and front-loading costs. Page 29 shows the live service game business. As this is similar to the aforementioned game business, we will not go into a detailed explanation here. Page 30 shows our development pipeline. While we are not yet able to share details, we have added a new project that has entered the full-scale development stage. We have again been able to launch a project with very high expectations. In addition to the projects listed here, we are preparing new titles based on major IP. As mentioned above, we are now confident that our strategy can generate hit titles with a fair degree of consistency, and we will continue to move the business forward with the aim of generating even bigger hits in the future. Page 31 shows our fourth quarter, FY 2025 earnings estimates. As mentioned on page 28, we expect full-scale earnings contribution from Puella Magi Madoka Magica, Magia Etc., starting in fourth quarter of fiscal year 2025. Promotional efforts have recently been effective, and we plan to continue them. While this will result in temporarily front-loaded costs, we expect these efforts to contribute to earnings over the medium to long term. Page 32 shows our forecast and outlook for FY2025. While we expect sales to fall short of our forecast on the delayed launch of a new title, we expect to reach our operating profit target. On page 33, we present our medium-term targets. These have not changed since last quarter's results briefing. We will continue making upfront investments in multiple new titles and in our full-scale entry into the console game market, aiming for long-term growth as a long-term investment business. Next, Eiji Araki will explain the metaverse business. Page 35 shows long-term sales and operating profit trends in the metaverse business. Quarterly sales and operating profit reached record high levels. On page 36, we have an overview of the metaverse business. The platform business contributed to profit as profitability continued to improve. We are reinvesting those profits in the VTuber business, where sales are also growing strongly, contributing to an overall improvement in earnings. Page 37 shows the platform business. We posted a record-high operating margin in third quarter. The main factor behind this was that we continued to improve our overall commission rate by diversifying our payment options. Also, we expect to surpass 20 million cumulative downloads worldwide in the near future and aim to further expand our global user base. Page 38 covers the VTuber business. We posted a record-high sales in third quarter and improved earnings. We currently operate multiple VTuber talent agencies, and the number of popular talents at several of them is increasing. This has allowed us to take a portfolio-based approach and achieve business growth. The proportion of sales attributable to merchandising has been increasing. As this is a high-margin monetization channel, the sales mix has improved, leading to overall gains in earnings. Page 39 shows our fourth quarter earnings estimates. While we expect strong sales in fourth quarter fiscal year 2025, we also plan to debut several new VTubers during the quarter. We expect higher sales but lower profits in the metaverse business due to one-time costs associated with new talent debuts, including those related to character production and 3D modeling. Page 40 shows our forecast and outlook for FY2025. While sales are expected to fall short of our forecast due to softness in parts of the platform business, the aforementioned improvements in profitability and continued earnings improvement in the VTuber business are expected to lift operating profit above our original forecast of 500 million yen to around 700 million yen. Page 41 shows our medium-term targets. We plan to continue growing the platform business alongside the VTuber business. We expect the VTuber business to enter the black on a monthly basis in fiscal year 2026 and on a full-year basis starting from fiscal year 2027. Next, Eiji Araki will explain the metaverse business. The IP business includes the anime business, merchandising business, and entertainment solution business, which will be presented in the following individual slides, as well as external licensing revenue earned by licensing our own anime IP to other game development and publishing companies. Page 43 shows long-term sales and operating profit trends in the metaverse business. In the past 3 years, both sales and operating profit have been soft. This is primarily attributable to a decline in external licensing revenue, as fewer titles using our anime IP were released by overseas game developers and publishers. Page 44 shows conditions in the IP business as a whole. We are achieving strong global growth in the anime business. Over the medium to long term, we aim to shift to a recurring, sustainable growth model in this global, high-growth market. Page 45 covers the anime business. We have built a strong track record of participating in numerous anime production committees, including as lead or co-lead partner. We aim to leverage this experience to secure even more projects in the future. Page 46 shows the merchandising business. Results thus far only cover the business concept validation phase and are therefore limited in scale. But we are planning a full-scale business launch starting in fiscal year 2026. Page 47 covers the entertainment solution business. This is also a new business. The entertainment solution business provides SaaS and AI-powered BPO services for the entertainment industry, including the digital publishing DX solution DDN. Although we are currently in the product development phase, Customer acquisition is moving forward smoothly, and we expect the business to contribute to earnings going forward. On page 48, we present our fourth quarter FY2025 earnings estimates. While we expect to post a loss in fourth quarter FY2025 due to a shift in the timing of revenue recognition in the anime business, this is in line with our initial plan and does not reflect any structural issues. We remain on track for growth going forward. On page 49, we have our forecast and outlook for fiscal year 2025. While as mentioned earlier, we expect sales to be somewhat soft in fourth quarter fiscal year 2025, we plan to move forward with our efforts to achieve growth while maintaining positive operating profit. Page 50 shows our medium-term targets. In addition to building on our existing businesses, we plan to invest in development of the entertainment solution business and funding for new anime production committees until fiscal year 2026. We will also continue transforming our business structure and target steady growth as a continuous growth business. Next, Kazuhisa Adachi will explain the DX business. Page 52 shows long-term sales and operating profit trends in the DX business. While we see a slight year-on-year decline, sales and profit rose quarter-on-quarter. Page 53 shows conditions in the DX business as a whole. Sales were 1.179 billion yen, and operating profit was 270 million yen. We are continuing our shift to a recurring earnings-type business, and we are accumulating more projects each quarter. On page 54, we present the DX Solutions business. We released a new SaaS product in February and began posting sales of this product in the third quarter. Operating profit deteriorated as we made upfront investments in promotional costs ahead of the release of our new product. On page 55, we cover the DX Consulting business. We are gradually building up a backlog of projects, and our internal resource utilization rate remains high. To address this issue, we launched a partner program in March and will work with external partners to support our clients' DX initiatives going forward. Page 56 shows our fourth quarter earnings estimates. Due to seasonal factors in the DX Consulting business, we expect sales to trend sideways Q-on-Q. We expect operating profit to decline as we plan to invest in promoting our new SaaS product. Page 57 shows our forecast and outlook for FY 2025. While we expect sales to fall short of our initial forecast, we expect to reach our operating profit target. We will continue our transformation into a recurring earnings-type business. On page 58, we present our medium-term targets. In fiscal year 2025 and fiscal year 2026, we will invest in the transition to a recurring earnings-type business, and we aim to enter a growth trend in sales and operating profit in fiscal year 2027. Finally, Toshiki Oya explains the investment business. Page 60 shows long-term sales and operating profit trends in the investment business. In third quarter, sales were 600 million yen, and we posted an operating loss of 100 million yen. On page 61, we provide an overview of the investment business. Volatility has been very high, with sales and profit declining by a large margin in first quarter fiscal year 2025 and then rising sharply in second quarter. Due to the relative absence of large-scale distributions from investment funds, we ended the quarter with a small loss. Over the longer term, however, the investment business has contributed to profit, and unrealized gains based on portfolio valuations are trending favorably. Page 63 shows quarterly change in operational investment securities valuation. During third quarter, we invested in 5 VC funds in Japan and the United States and 8 startups. On page 64, we have the status of our investment results. We have achieved favorable IRR when compared with benchmarks. Page 65 shows sales and operating profit in the fund investment management business. Page 66 shows AUM in the fund investment management business. Total commitment, on which management fee income is based, has remained steady. That's all for the investment business, and this wraps up our presentation.